Welcome to Explain the Charts, where we break down the movements of the world's most influential tickers. Today is April 30th, 2026, and we are looking at a truly remarkable performance by Alphabet Incorporated, better known as Google. The market sentiment is currently electric as Google appears to be on the verge of becoming a $4 trillion company. Recent headlines indicate that massive AI wins are driving the surge, with analysts turning increasingly bullish on their infrastructure growth. Interestingly, the stock is completely shrugging off the Department of Justice news regarding Chrome, suggesting that investors are far more focused on revenue potential than regulatory hurdles. We have also seen reports of Alphabet cutting jobs to streamline operations, a move that the market often rewards with higher valuations. With tech leads pushing the Nasdaq higher, Google is currently the star of the show. Before we look at the technicals, it is worth noting that competitors like Microsoft and Meta are also spending heavily on AI, but Google's integration seems to be winning the current sentiment battle. Now, let's transition to the charts to see how this fundamental news is manifesting in the price action. We will start with a broad view of the daily chart to understand the long-term trend. Looking at the daily chart for Google, we can see a massive recovery that has been building since early 2025. Back in April 2025, the stock was languishing around the $145 to $150 range, which now looks like a generational bottom. Since then, it has been a series of higher highs and higher lows, illustrating a robust bull market trend. The breakout above the $200 level in August 2025 was the first major signal that the momentum had truly shifted. From September to November of 2025, the stock climbed aggressively from $211 to over $320. There was a period of healthy consolidation at the start of 2026, where the stock tested the $310 support multiple times. However, as we moved into April 2026, the verticality of the trend began to increase significantly. The candles for late April show a massive expansion in range, which often precedes a major fundamental event or earnings blowout. We are currently seeing a parabolic move that has taken us from $297 at the start of the month to nearly $350 by yesterday's close. This type of growth is sustainable only if the volume supports it, and we are indeed seeing high transaction counts on these green days. Now, let's zoom in on the 1-hour chart to see the intraday behavior during this recent April breakout. Throughout mid-April, the $317 to $320 zone acted as a strong baseline for the stock. Every time the price dipped toward $315, buyers stepped in with high conviction. On April 14th, we saw a decisive move from $324 to $332, which broke the local resistance. This level then flipped into support, as seen in the subsequent days where the price hovered around $335 to $340. This stair-stepping pattern is a classic sign of institutional accumulation rather than retail speculation. When the news of the AI wins hit the wire, the reaction on the hourly chart was almost instantaneous. The consolidation between 337 and 344 in late April provided the fuel for the final explosive move. It is important to watch the volume on these hourly bars to ensure that the trend is not exhausting itself. Currently, the hourly trend is steeply bullish with no signs of a reversal pattern yet. To truly understand the power of this move, we have to look at the 15-minute chart for April 29th. Notice the action leading up to 1930 Universal Time Coordinated. The stock was trading relatively calmly around $350. Suddenly, at the 1954 candle, there was a massive spike in volume and price. In a single 15-minute interval, Google jumped from $350 to a high of $367.44. This is a massive nearly 5% move in a quarter of an hour for a mega-cap stock. Following that spike, the stock did not sell off, which is a very bullish indicator. Instead, it continued to climb in the after-hours session, reaching a peak of $376.60 before settling. The close at 375.29 on the 15-minute chart shows that the bulls are in complete control going into today. This suggests that the market has repriced Google based on the new $4 trillion valuation target. Any pullbacks toward the 363 breakout point would likely be met with significant buying interest. As we analyze the total picture here at Explain the Charts, several key levels stand out. Our immediate resistance is the recent high of 376.60, and if we clear that, 400 is the next psychological target. On the downside, 350 is now our most critical support level, representing the previous breakout zone. If 350 fails to hold, we look at 332 as the secondary support where the rally originated. Reasons to be bullish include the clear dominance in AI and the market's willingness to ignore regulatory news. The only reason to be bearish in the short term would be if we see a blow-off top with massive volume followed by a sharp reversal. For long-term holders, the trend is your friend as long as we stay above the daily moving averages. I would estimate a 70% likelihood that we see a test of $390 to $400 within the next few trading sessions. This prediction is reinforced if the Nasdaq continues to hold its recent gains and Alphabet's revenue growth remains steady. A 30% chance exists for a mean reversion move back to 330 if the overall market faces a liquidity crunch. Keep a close eye on the 15-minute volume during the first hour of trading today for clues on direction. If we see high-volume green candles early on, the path to 400 is wide open. Always remember to manage your risk and use stop losses to protect your capital in these volatile markets. This video and analysis is for educational purposes only and is not financial advice. Please do your own research and consult with a professional before making any investment decisions. Thank you for watching Explain the Charts, and we will see you in the next analysis.